Hey traders, welcome to Charts and Coffee. Hope everyone is doing great this Thursday morning. We've got the non-farm payroll number tomorrow. So when we have a significant number coming up, what tends to happen is a little bit of wait and see, a little bit of even if you want to think about it, tall poppy syndrome. I mean, who wants to jump out ahead of a number like that and whoosh, get cut? So ultimately, the way in which we have reaction to events like this, shorten the time frame, being able to be nimble and maybe even flat going into non-farm. My Sector Secrets Mastery folks, we will be live. We'll be in the market. We'll be in the chat room live to watch the market and possibly set up some trades as we go into NFP. That session will be kicking off at 8:15. So my mastery folks, be ready. It's not an event I recommend that everybody trade, and that kind of brings us to risk, right? And I do want to mention this because I think it's pretty darn important. The last couple of free videos that I've done, and I'm sure a lot of you have seen them. If not, check out the Simpler Trading YouTube channel. I'm going to start posting these on a more regular basis, not only in the Simpler Trading YouTube channel, but also my YouTube channel, because I can post these every day. I didn't get to post an update yesterday. I'll definitely do another recap on Friday. What I want to share with you all is TradesViz. I've been using TradesViz. I just met the founder yesterday. We don't have any kind of agreement with them. I am a full paying customer of this software and I love it. It's actually been, of all the software, this will be the 1, 2, 3, fourth one I've tried. It's really, for what it does, the least expensive. And I really love the fact that it's the most automated. With Tradier, it's automatic. It just uploads into this platform. Everything else, all you need to do is grab your trades from your platform and upload it into this. And then it puts the trades in here. Now, these are the futures trades for the week. Yesterday, we also traded Apple, which was a nice day trade. So these are my futures trades. And then I have a separate tracking for my options trades. And a lot of you know I've tracked my trades for a long time. We all need to track our trades, right? And so it's really important that you find something that makes it easy. This has been really easy for me. I just saw that they now have a way so you can have these little charts that show your trades using, I'm going to figure it out this weekend because it looks amazing. But anyways, I bring this up because I want to show you all how little trading we're doing, right? How little trading we've done. Obviously we have a shortened week, Tuesday, Wednesday, Thursday. Tuesday was a challenging day. We just barely eked out some break even and small winners. Yesterday was an excellent day. We had a very good trade in the NAS, but that's it. We didn't continue to push. And I know a lot of folks say, well, when you have an advantage, push it. Depends on what time of day it is, gang. So look at the clock, because everything I'm showing you here, one of the easiest ways, one of the easiest remedies to keep from over trading, right? There are two really simple ones. Please don't use market orders. Please, because you have no idea where your fill is going to be, right? So I don't talk about market orders at all in my trading. I'm just talking about me. All right. I don't talk about market orders at all, because how do you know where my fill is? Right. So that's the first thing. And so that means we use limit orders and stop orders. All right. And the second thing is limit the amount of time, especially for day trading, that you're engaging the market. Every one of these trades were entered by, and usually before, well before 10:35. Limit the hours. And you know what happens? You'll watch traders get their what's handed to them in the first hour, and then they'll persist on trading the rest of the day in an effort to dig out of the hole. Don't do that. In fact, on the video I did Tuesday, I talked about how not to lose your shirt. I talked about the difficulty of scaling in, having to scale out of a leg of a trade. If you haven't seen that, please do, gang. I'm open to showing you all the good, the bad, the ugly. On Tuesday, I got a little bit into that as well. So please think about how often you're trading right now in terms of activity, right? This is not the time to be going in, full steam ahead, because we've got the FOMC decision coming up later this month. Can't believe it's June already. And we've got the and non-farm payroll tomorrow. That goes that hopefully without saying, but we've got a significant amount of data and then a major decision where we're likely to see a quarter point hike. We can see where bond yields are kind of all over the place. We know that equities are having to recalibrate to yet another quarter point hike. So please shorten the time frame. Be cautious. And the software that I was just showing you all, TradesViz, and even better, if you'd like, head on over to and I know a lot of you are there right now. If you head on over to the Simpler Trading YouTube channel, you go to YouTube, I know a lot of you are there. So just go to where we have our videos posted and you'll see a lot of them. And if you kind of sift through the videos, Tuesday, how not to lose your shirt, good, bad, and ugly of this week. And then last Friday, does your week look like this? Again, we had an excellent week last week. And a lot of folks saying, is this a difficult environment? It's not. It's not right now, gang. It only is if you're pushing past 1035. It only is if you're fighting trends. There are intraday trends. And I get into a lot of the detail on that was a 13-minute video. So I get into a lot of detail on that. I really want to help you all turn the corner. And the only way I can do that sometimes is with a lot of explanation of what we're doing. All right, let's get to our questions. And first up is good morning. KR, how are you? If I have a 25% stop in place. So by the way, again, 25% stop before you think, wait a minute, Rob, 25 of what? Premium paid. So we're talking about futures options. We're talking about stock option. We're talking about ETF options. A couple things to keep in mind about stops for those of you that are getting your butts handed to you right now. Fixed position sizing, right? Fixed position sizing and fixed also risk, fixed bet risk. The idea that we should vary our bet size, I think, is inherently incorrect because it somehow assumes that this trade's a winner, but this one may not be. I can't tell the future, right? I was watching Days of Thunder yesterday. I know, terrible, but awesome. It's terrible, awesome in the way that Roadhouse is, which is a terrible, awesome movie. And there's that scene where Nicole Kidman is absolutely dressing down Cole Trickle, Tom Cruise's character, telling him, I've got news for you, gang, or for you. No one can controls anything. No one can see the future. And oh my gosh, it was a great scene. I need to find that on YouTube because we need as traders to remind ourselves of this. So 25% stop in place, and it's going to get hit. What kind of sell order do you place to get exactly a 25%? So KR, look, we do our best to do 25%, but here's the way that I have found that works for our traders in the Sector Secrets Mastery. You know where 25% is. Place the order, right? If you want exact 25, other than a gap open where none of us can do anything about our order, everyone's helpless to a gap. If you're day trading, say with me, and you know what 25% premium value is, put in the order, right? Put in the order, put in the stop order. That's how you do it. It's really that simple. What I recommend though, is what that number is that represents a 25% drawdown. Put an alert in, maybe 5 to 10 cents in front of it. That way you get an alert and you can make a little bit more of a specific decision around pulling that trade or not. That's what I like to do, but either one works. All right. So let's see. Next up is good morning. Tony L asked, what was the website? TradesViz. I've used a lot of different ones. But TradesViz is the one that I'm using right now. Wingman Tracker is great. Let's see here. Let me type it in. Trades, TradesViz. Okay. And I'll be working with this more and more. I actually it was a member that told me about it. I was still using Wingman Tracker and maybe Trader Sync. And I had a member, I believe, in the mastery. He said, "Rog, you really need to check out TradesViz." And that was probably about a year ago. And I started playing around with it a little bit. I've tracked my trades on spreadsheets and things like that, Wingman Tracker. I've done a lot of different software. I really found myself liking this one a lot. Okay. Again, I'm a big fan. I pay for it like everybody else. I think it works really well. Okay, next up is I would like to hear your thoughts on SPY. Yeah, let's do that. Let's jump on over to SPY. If we're going to do SPY, we really should look at ES, right? So by looking at ES, I'm looking at the more complete view of the S&P as opposed to that 9:30 to 4 view of the S&P. And so if I take a peek here, let's go to the daily time frame. There we go. It's a mess. Guy, if I know a lot of folks love the S&P, and I'm going to tell you, and this goes back to, this is again, when I look back on last week, when I look on this week, I keep going back to the NQ. The NQ, and by the way, that software can look at your, and a lot of other software can too, but TradesViz can look at the individual symbol and your results on it. What's your win rate? What time are you getting into the trade, etc. And so ES has not been good to me. And the reason why, Guy, tech is the cleaner narrative. XLK, XLC, XLY, SMH. That's NASDAQ. ES can benefit from that tech clarity. But remember, what we have is also XLV and XLF. And those have not been really clear. And then what's worse is we've had situations where tech is moving higher, like yesterday, but we have, say, XLF and XLV moving lower. Realize unless XLK, XLV, and XLF, for the most part, all three of them are moving together, clarity on the S&P is going to be much more difficult, right? So let me at least put that out there, because if I'm looking at how I'm trading, what's working is that synergy in the NASDAQ. Ultimately, we are trading above the previous session close. There's a lot of value in knowing that. If you look at, say, the last hour of the day, and you look at the closing price, 4 p.m., that's going to tell you a lot about the opinion traders have on price the next day. Are we up from yesterday? Are we down from yesterday? That's probably one of the first insights into sentiment that we can get as traders. So slightly bullish sentiment, choppy 5-minute chart. I don't have an edge at the moment where I could say, hey, there's a trade, but I'll probably be mildly bullish. All right. I'll probably be mildly bullish. All right. Let's see. Stephen asks, was wondering what is my preference for using one platform for both charting and execution? Depends on what it is, Stephen. It depends on what the trading is you're doing. Options trading, futures trading. I'm getting my trading business moving. Awesome. Stephen, toss is fine. I don't like it for futures day trading, to be quite frank. I think there are better choices. For options day trading, it's fine. That's a really tough question, unless I know the asset classes, Stephen. But I'll tell you, I use TradingView. It's plumbed into TradeStation. It's plumbed into other trading accounts I have, and I have Toss. That's really where I spend a lot of time, and I've been getting into Tradier a little bit more. Do I think it's a good time to buy Visa? Interesting you ask. Is it an uptrend? No. Is it an uptrend on the hourly time frame? No. However, and we've already visited this level, we did it yesterday. The daily price movement range and the 200 are nearly oversold. So says the slow stochastic, my favorite indicator for overbought and oversold. And it's free. It's built into darn near every platform out there, but it's a slow stochastic that I also slow down, right? That's the key. So if I can get into the 200 daily price movement range zone, it's not a trend following setup, but it is possibly a decent buy from the standpoint that if we're going to see any kind of support kick in, I'd like to see the 200 hold, but the daily price movement range, this historical volatility zone that is based on going back 6 months and looking at the price movement range on Monday, Tuesday, Wednesday, Thursday. Gang, there's two things, and I get this question a lot. All right. There's two things that I find are really, really helpful, and one technical indicator that I find really, really helpful. We always want to know what institutions are doing. Gang, and only because many of you probably know folks who work at institutions. I do. Been at this for well over 3 decades at this point. They use volume. They use volume and they use value. They use risk, right? They use something called VAR and they use volume. And they're not looking at how much volume happened on a Tuesday. And they're not looking at the typical histogram that a retail trader looks at. They're looking at price-based volume. They're looking at how much size occurred at a specific spot. Anchored VWAPs, my V score, volume profile, volume ledges, how much volume is associated with a certain price. That's what they use. And you know why? Because they're putting on monster size. They can't be wandering into illiquid places in the market because they know competitors and retail traders, if they were to expose their full size, would pick them off, right? Now, I'm not going to get into dark pools and things like that, but volume matters. VWAPs, volume weighted average price anchored, is the key. Okay, the other thing, this value at risk, this VAR, that's based on volatility. So if you want to know what institutions are doing, if you want to know what size is doing, you look at volume, you look at volatility. They don't look at indicators, gang. I tell you right now, they don't give a rip where an RSI is, not to pick on an RSI. The one technical indicator I will say you'll see it's respected is the 200 simple or the 200 exponential. That particular technical indicator transcends sort of this charting only technicians type approach. Everyone seems to know where that one is, right? Because you can see how mainstream the death cross or the golden cross is. So we know where that 200 is, and that's why I call it the equator, separating the bullish hemisphere from the bearish hemisphere. But I get folks asking me, Rog, what is size looking at? Not that that's the end all be all, but they're looking at value at risk and they're looking at volume. That's it. They don't have people looking at all these technical indicators. It works for retail traders. Now, why? Don't let naked chart traders shame you. Every now and then, there'll be someone that says, I only use a naked chart. Well, good for you. You want a cookie, right? Indicators decode open, high, low, close. So if I want a little bit more detail about the nuances, right? Don't let anyone shame you. Indicators do help, right? I find I'm using fewer than I used to, but they do help. So find what works for you, find what speaks to you, and think about incorporating volume and volatility into the analysis. And that's what those zones are, right? That's what those zones are. So I hope that makes sense. And then that's going to kind of go back to KR's question about risk, right? So I hope that makes sense. And that's even going to go back to Oscar's question about Visa. Why would I focus on that zone? 200 and volatility, okay? All right. That's it, gang. That's a wrap. I will see you all tomorrow. Same time, same station. And remember, gang, I'm just sharing what works for me. I get this question a lot. I don't know what works for everybody. I can only share what works for me. I can only share how we're doing in the rooms. And what I hope is with the transparency, you say, wait a minute, I can incorporate some of these ideas too, right? That's all we can do. Be good to each other. I'll see you tomorrow. Same time, same station.